we say there's basically now, simply speaking, two groups of banks or financial. The ones that don't have instant at all.
Right.
For them, the key challenge will be timeline. So when the regulation will come into force, you have 9 months from that. So that's expected to January, February next year. You have 9 months to be able to receive instant payments, and you have another 9 months, so 18 in all, to send instant payments. And then, what I said, there's some more time for the non-Euro countries in the EU to implement it. But that's really a tight timeline. Yeah?
Yes.
I mean, it's, if you implement instant payments, you need interfaces to the embargo system, to the disposition system, to the booking system. And all of these interfaces then need to be 24/7, 365, and all of it in 10 seconds. So that's a challenge.
Hubertus, thank you so much for joining us. It's a pleasure meeting you.
Thank you. Thanks for being here and having the opportunity to talk to you.
I'm really looking forward to our conversation. Before we start, just for those who have not had the pleasure of meeting you, can you please tell us briefly who you are and what you do?
Yes. My name is Hubertus von Poser. I'm 58 years old. I'm a member of the board of management of PPI. I'm located in Frankfurt, and we will talk a lot about payments. So payments is my specialty for many, many years now. Yeah.
Wonderful. Okay, now tell us briefly, what's PPI's value proposition and what problem does it solve in the market?
Okay. I would say PPI is a European company with German roots, but also with offices in France, in Italy, in Switzerland, and clients in the Nordics and other European areas. What we do is we are completely focused on payments, and what we do offer is, especially for, let's say, financial service companies like banks, card companies, our approach is to help them with everything they need if they need support in their payments area. So it could be consulting support, it could be software. We have a complete stack of software for payments, especially on the accounts to accounts payments area. But also we offer this software and a service if they don't want to install it on-prem. We offer it in a service model. So we want to be, if our clients have a problem in payments, we hope they give us a call. Yeah.
All right. Now, I understand that one of the areas that the PPI covers quite extensively is this whole conversion towards SEPA payments.
Yes. Yeah.
So I'd love to get your take on, well, first of all, explain a little bit what SEPA payments are and what are they useful for?
SEPA stands for Single Euro Payments Area.
Yeah.
So this is payments in euro across, let's say, Europe, basically, and let's say there's a committee, I would say, or an institution called the EPC, the European Payment Council, and they have defined it's a bank, let's say, owned or governed institution, and they have, like, so for example, ISO does in other areas, defined set of rules for specific types of payment that apply if you want to offer them as a bank, especially. So those are credit transfers and direct debits, and the goal or the aim behind it is, of course, to be interoperable across European borders and to have the same set of rules for all these credit transfers or direct debits, and that's what SEPA payments are. Yeah.
Right, and just to clarify, so this is just for payments made within the Eurozone, or this is European Union?
Good question. It's for payments made in euro.
In euro, okay.
Basically in the European Union, there are also some rules, or there's a rule book, for example, for so-called one leg out transactions. So when one leg of the transaction is still in the EU, but I would say it's basically for euro payments within the EU. So we will probably discuss a bit about instant payments, and there's some rules for being a euro country in the EU, and there's then other time frames for countries being a non-euro country in the EU.
Right. So, okay. So it gets complex. Okay.
Yeah.
Now, As I understand it, the idea of having instant payments within the European Union, it's mostly about immediacy and convenience for the end user. Is that right?
I mean, basically it says if you use a SEPA instant credit transfer, then the time from, let's say, starting the payments from my account, let's say it's my account to your account, is 10 seconds. So once kind of I clicked to send, it must be on your account and you must be able to use it after 10 seconds.
Right.
One idea is to address specific use cases. For example, I have 4 children. Sometimes it happened, I ran out of money. Can you help? Immediately. But there's many other use cases. But there's also, I think, behind the idea of instant payments is also, I wouldn't call it a political, but maybe a more societal reason is we see many use cases, business models now depending on e-commerce, the internet, and all those kind of things. In order to be able to provide this, you need to be reachable. It needs to be fast.
Right.
It needs to be, let's say, at least not expensive. And that's why we have now SEPA credit transfer. There is no, let me say, there's no e-commerce without immediate payments, because for the retailer, he wants to know whether at least he gets his money for sure, or he gets it in a matter of seconds.
Okay. Now the question I have here is that all the benefits that you're mentioning, it seems to be competitive advantages that any player in the market would seek to develop on their own basis, right, as part of their strategy. But I understand this is something that is now mandated by the European Commission.
Yes, we will see a law. It's expected to be, let's say, final and coming out in the next weeks. So the text is agreed now, but now still the Parliament needs to agree. The Commission needs to say it. So finally say it's okay. And from there on, once it's published, you have 20 days. That's a legal rule. Then it's in force, and this will happen. Everybody's expecting this to happen in, let's say, April to May, and then coming into force means then you have certain periods when you need to implement it. So it doesn't mean, on the day the law comes into force, or the regulation comes into force, that you immediately need to comply with it. But that's happening now in the EU, and I think one additional driver is also a political one, and that is, let's say, to have something like European or EU autonomy, something like being not dependent from the US card schemes, not be dependent from Chinese payments methods, and if you want to be that, or you want to have that independency for EU, let's say, players, then everybody needs to be reachable. That's key. Now, if I'm, for example, I can't reach you because your bank doesn't offer it, then you can't build up use cases on that. If you're a retailer and you have your e-commerce business and you want to use instant payments, but I can only reach, let's say, 60% of all European people, then it's not of use for you. And as all these, let's say, modern business model rely on instant payments, not as a scheme, but as a general rule, it's really important. And personally, I'm convinced it's needed that everybody's reachable. And how do you make sure that everybody is reachable? You can only do it by regulation. I mean, there have been, we now have seen a period, I don't know the exact years, let's say 4 to 5 years, where it was not mandatory, and what we saw in the end is not everybody's reachable, so not all the banks or other financial institutions joined the scheme. In some countries it's still expensive, so more expensive than a normal credit transfer, and so things like that's kind of hindered instant payments to become a means of payments for everybody. Okay,
and let me double click on that, because you make some good points about why it's beneficial to have instant payments across the European Union. I agree. I think that it makes good sense. And yet we've seen a very, very varied level of adoption across the various countries. Why is that happening?
I think I mean, it depends on the market. For example, if you look at the Netherlands, that's a market where the adoption rate is very high, because that market decided to say, we make the kind of instant payments as that we call it the fallback solution. So whenever we can use instant payments to reach somebody, we will do that. So that's very attractive. In other markets, for example, also a bit like Germany, you pay additional fees, and which are sometimes very high compared to normal credit transfers for an instant payment. So that's one reason why in some markets the adoption rate has been lower than in others, because in other markets, for example, where the adoption rate has been higher, one of the outcomes of the analysis of the European Commission was that the price was lower and therefore it was more attractive. Yeah.
I see. Okay, so it's mostly a cost.
Yes,
cost issue.
Cost issue, and I mean, it costs a lot to implement it for the banks.
Yeah.
So some were saying, okay, I need to generate a high fee. Others took a different strategy and said, I keep the fee as it is, but I build additional use cases or value add on top of instant payments.
Right. Okay. And what would you say are the main challenges that some of these banks have experienced when trying to roll out?
Yeah. I mean, we say there's basically now, simply speaking, two groups of banks or financial. The ones that don't have instant at all.
Right.
For them, the key challenge will be timeline. So when the regulation will come into force, you have 9 months from that. So that's expected to January, February next year. You have 9 months to be able to receive instant payments, and you have another 9 months, so 18 in all, to send instant payments. And then, what I said, there's some more time for the non-Euro countries in the EU to implement it. But that's really a tight timeline. Yeah?
Yes.
I mean, it's, if you implement instant payments, you need interfaces to the embargo system, to the disposition system, to the booking system. And all of these interfaces then need to be 24/7, 365, and all of it in 10 seconds. So that's a challenge. So there it's mainly the timeline and being ready. For those banks that already have it in place, there the challenge is, I think, in 3 areas. One is, as I said, 24/7, 365. It just makes a difference if maybe now you process, I don't know, a small number of transactions every day, and suddenly the numbers go up. So your systems need to be much more resilient.
Yeah.
And also maybe you had, or we know some of the banks kind of had workarounds in place because the numbers were low. But then if the numbers go up, which everybody's expecting, then you really need to be instant payments ready. Yeah. And this, for example, also applies when you implement a new release, which can be very complicated. There you're not able to say, okay, dear customer, I'm not available for the next 2 hours because I have a new release to be implemented. Yeah. So that's a challenge. So I would say a technology challenge. Then there's another one that the regulation is not just focusing on, let's say, on the processing of the transactions. It's also focusing on implementing some fraud protection, detection, etc. mechanisms. It's called the payment account validation. So you can use a service as a customer to say, okay, I send you 10 euros. Is it really your account, or does the IBAN belong to somebody else and I'm a victim of at least somebody trying to do some fraud? So there's additional functionalities. So those need to be implemented. And then the third area is business case.
Yes.
The regulation says it's not allowed for a SEPA instant credit transfer to be more expensive than a normal credit transfer. So banks need to rethink their business model. So that's the 3. So technology, additional functionalities, and business case. Those are the 3 areas. Good for us.
Yeah, okay. That's my next question, because I have worked in financial organizations in the past, and I know that because of the regulation and because of the serious nature of the business, things move very slowly, right? And that's what you want. So hearing you talk about all the things that need to change and all the things that need to be put in place, in a period of 9 months, that sounds like almost untenable for most financial services organizations. So my question is, let's say I'm a bank in the first group that you described, a bank that really has not done anything in this space. What options do I have in order to be able to comply with the 9 months?
I think you have two options, but probably, I mean, if we look at those banks, often these are banks that they just use payments for another business they do, like for example loans or mortgages.
Yeah.
So they don't have high number of transactions. So they could use somebody who does it for them in a service model. So he says, you connect to my software, and then we process the instant payments for you. That's one option. The other one is you can go to another bank and say to a large bank, for example, can you do this for me? And the third option is to implement software, but for that, the time is really tight.
Right.
I mean, you either develop it yourself or you buy some software like from PPI or somebody else.
Yeah.
But to install it on-prem in 9 months is really tight. So probably many of them will go for a service model or ask another bank to do this for them.
Right. Okay. So, and can you tell me a little bit of how is PPI using technology then to help banks that are finding themselves in this situation, perhaps expedite?
What we do, first step, we offer a instant payments readiness check, and that's let's say that's a ready-to-use consulting asset. So we have a tool. You have all the questions in. What do you need to do? Which system is normally affected? Do you have this, etc.? So you have, let's say, a set of workshops to see, okay, where are the areas where we need to do something, and then once you know that, and the probable outcome is we need somebody to do it for us. We have a service model, so banks can connect. We have a subsidiary called PPI Financial Services. They run the software then for you. You connect to it. I mean, there's also the devil is also always in the detail. Yeah. But basically speaking, it's the bank then connects to our software being run by PPI Financial Services, and then we process the instant payments for them.
Okay. Now, as a consumer, and also as a consumer that regularly sends money abroad, I've been using the services of some of the fintechs that are for example, Wise. They pride in you see the time clock saying it's like 5 seconds and your money has arrived. So they've been doing this for a while. Revolut as well. Why can't banks just basically partner up with these fintechs and say, well, you already have figured out the instant payment model, do it for us?
I think some do for, let's say, specific use cases. For example, you mentioned Wise. I think some banks are rethinking their strategy and say, why don't we partner with them instead of competing with them? But the other side is that banks, they want, let's say, business come back to the account.
Right.
The current account is their, let's say, kind of heart of their business. And what they want is, of course, to maybe not so much with regards to some of the ones you mentioned, but if you look, for example, at the card schemes, I mean, they generate fees from the merchants, etc. And the banks want to have the business back on their side. And that brings us back to the starting point. In order to compete with those schemes or fintechs or whatever, you need to be reachable all the time. And that's only possible if you have a regulation demanding that you're reachable all the time. Yeah.
All right. Well, it sounds like we have some exciting things to look forward to in the Eurozone when it comes to payments, that this immediacy of payments will really bring us to the next generation of payments, and will help the use cases of merchants and people that want to pay. Probably the elephant in the room that I always hear in relation to this is security. So how can these banks ensure that there's still the security necessary for instant payments? Because when you have that little buffer, at least you can perform the fraud checks and the anti-money laundering checks. But now it's like that.
Very good question. I think that's let's say an issue the regulator has also seen. So that's why he's now demanding that banks provide a IBAN name check, or it's now called a payment validation, payment account validation, so that when I send money or a corporate is sending money, that they can ask, does this IBAN, the account number, the IBAN, really belong to this person I want to send the money? Because in order to understand why that is the case, you need to look back. When SEPA was introduced and the PSD, the Payment Service Directive, was introduced, there was a rule defined saying all you need is the IBAN, because the IBAN has a checking number whether the IBAN is correct.
Right.
But fraudsters find out, that then you confirm that the IBAN is correct, but you don't confirm that the IBAN belongs to the one you think you're sending the money to, so not the real account holder. So that's why the regulation is now demanding that banks need to offer that kind of service.
Hubertus, just to close, can you tell us a little bit what can we expect once payments become instant, and what would the future of payments look like after that?
Okay, I think there's two areas. One is the use cases just connected to instant payments. So there's only the instant payments. The one is, I mentioned, for example, I need to send money quickly to my children. Another one is corporates. With interest rates going up, it's more attractive to keep the money for another day, and then you're sure if you send it the next day, as it arrives after 10 seconds, you still meet the timelines. But you generated one more day of interest rates. But I think the real, let's say, fun or value add comes in if you add additional, let's say, functionalities or use cases to instant payments. And one idea, for example, we promote in Europe is combining e-invoices, request to pay, and instant payments. Maybe let me start with what is request to pay. Request to pay is also, it's not a payment scheme, it's a message scheme. It's basically saying, I send you a message, a request to say, can you please give me 10 euros for something, and you accept it, and then a credit transfer comes to my account and it's paid. This you can combine with invoices, electronic invoices, for example, in B2B business. And the idea is that a corporate sends the request to pay and the invoice to a bank. The bank routes it to the payee, to the payer. Sorry, not to the payee, to the payer. And he then accepts it or does not. But if he accepts it, for example, he presses OK, accept it, and then instant payments credit transfer is generated. And the advantage, for example, in this regard of instant payments is we haven't talked about it. It's you can't recall it. It's final. And out of this, you can create a whole, let's say, additional use and business case that is attractive for corporates, because they don't need to match what they today do with many people's often, the payments data with the invoice data. For the payer, it's very convenient because his data are already, pre-filled. He doesn't need to take the invoice and then input the data for the credit transfer. And then back to the corporate, it's attractive because he, as I said, he doesn't need to reconcile the payments data with the invoice data, because it has been sent in one and comes back in one. And for the bank, it's attractive because they generate business on the account.
Right.
And there's many more ideas on this, but I think that's the real value for banks and customers and clients is within instant payments, to add additional, let's say, value or functionalities market. Yeah.
All right. Well, that sounds very exciting. Thank you so much for taking the time to come and visit us here in Copenhagen. It's really been interesting listening to you, and we'll keep a very close eye on how this evolves and whether the banks will manage to beat the deadline. It sounds like a very, very big challenge ahead of them.
Yeah, thank you very much. It was fun coming here, and nice to talk to you.
Likewise, it's been a pleasure.
Bye.
Thanks.
You.